as the market then starts to move back up, you have the same alternative here of looking here where this predicted high and starting to build up the position again that you abandoned, and you're starting to again add a contract or two. Depends on your trading style, but the point is that you may want to set up a stop for all your positions below the last major low, as a traditional technical analysis analyst might do by putting a stop below that low. Would it get you out at this point right here? Again, there's an adjustment that you have to make. You can see that we had a big decline here, and on this big decline, this came in, and I think February, I can't remember the exact date, around the 4th or so of February this year, where you had that big slide. The market skidded through the predicted lows, and again, whatever you might have accumulated, you might want to lighten up. You had other situations here where, depending on the number of contracts you had, you might want to lighten up a little bit. And so how many contracts you might have left as you move ahead, how many you're going to have to manage as you move through this trend, will be up to each individual trader based on their own determination. Well, now we're going to go back to the current time. We don't want to get locked in the past too long. We always want to keep an eye on what's coming up today. Where are we going to go in the future? What's our situation today? And so we are going to move into the more current time frame and talk about what is going in the current time frame. Now, I said we were, this is the contract as we looked at it before, the longer term one, but we're going to cut this back down, and we're only going to look at the last 3 months, because that gives us, we already know, we have a feeling of where the market is going. We already know some things about the market based upon what we have looked on the chart before. Let's maybe just get a closer view of the triple cross. What does it look like at this point, and does it tell us anything that might be helpful? So we'll go to the triple crossover indicator, take a look at it as to how it looks in the more recent time frame, and there you'll see that the if you were following the triple cross method, the moving averages that are moving up, generally still moving to the higher side. The red line, blue line, green line, top to bottom in that order is, of course, a rather bullish type of scenario. You will get your dips, but overall, you can see that that green line is pretty much headed to the upside until we get a little kink there towards the end, which we'll talk about in a little bit. So, those are points that we want to look at with the vantage point indicator with the triple cross type of a method. Well, now we're going to go to we're going to come back to our predicted high and low, because we want to get some specific points at which we're going to act, or whether we're going to get out, stay in, or whatever. As I mentioned before, we talked about where we would have the stop before. We want to go to that last low, that last significant low that we can see on the chart if we're talking about traditional technical analysis type of techniques, because we don't want to crowd the market too much with our stops, get too close to the market, because the last thing we want, if we're in a long-term trend and we're convinced it's going higher, is to be stopped out before it makes its full run, and we don't want that to happen to us. So now we're looking at the last stop. If you don't have it on here, this chart doesn't go quite that far, but the last stop would be somewhere in, I think it was the 1040 area, and we're going to be moving that up above that last low. And then now we're in a situation where we are able to build that position again. Do the same thing as we did before. We look at our predicted high, predicted lows, and we look at our predicted highs, for example, right here, and we can say, okay, is this a point at which we are able to add? Right here, do we start there? There are a lot of different places in here where the market does give you those little dips, generally in an upward move, and so you have that predicted high you can lose as a reference point for when you want to add to or get back into a position, a bigger position. Now we come to, we're going to just kind of skip ahead here a little bit, and can't possibly cover them cover everything. We want to get to a point on May the 13th, this May 13th candle here, where we start to have a little bit of weakness show up. We had a predicted low on that day of 1227. 1227 minus the $10 leeway we talked about would leave us at 1217 as a place to at least start to lighten up. And that would be somewhere right in there. Is it the move? Is it the end? Is this it? You know, that's a question you probably will be asking yourself. But in this situation, it at least is a clue that here's a if we're managing our positions during a longer term trend where we might lighten up. Let's see what's going on first before we try to stick with so many contracts without trying to risk them any more than we have to. Again, the market kind of tails down a little bit. Then it does come right back. You know, we have a situation here again, May 24th, where we have a predicted high 1188. So we're buying at 1198. That price of buying is somewhere right in the market, 1198. That means that you know, again, first priority, manage the position, make sure we aren't taking on too much risk, make sure we have our stops in place so that we don't get hurt, but we can add to our position and you know, theoretically ride the trend even higher than it already is. Now, one point that we should make is that based upon the highs that we have already had over here, you know, we are talking about a situation where when we are moving into a high, we may not want to be quite as aggressive because sometimes those highs can act as pretty strong resistance. It may get through there, but it may be strong resistance. It may, you know, have some setbacks and so forth that we don't want to be involved with. So you have to kind of keep in mind where you're at on the chart and what's happening. Of course, most recently we have this pretty much kind of like a double top situation, and the market since then has kind of turned to the downside, you know, including some like a one sharp move. So let's kind of look again to what is happening this month. We have a situation here on July the 1st. We had a predicted low, 1237. So that means, you know, if we were doing this on a short-term basis, at 1227 would be our point in which we would, let's say if we were a swing trader, get out, or if we were the long-term position trader, where we would try to lighten up. You know, it's kind of one of those lighten up, build, lighten up. You know, as you go along, you're trying to manage your position through this whole trend, convinced that, of course, that trend is going to go on up. Is this the end? Is everything, every piece of news out? Is this the end of the bull market? Obviously, when you look at it right now and try to determine whether that's the case, you will see that we have, you know, the predicted difference indicators are pointed down. We have the neural index at 0. We have, you know, if you recall that little wrinkle on the end of that triple cross where that long-term moving average, that points down. So you have a lot of indications that perhaps this market is turned lower. But if you're convinced, if, you know, again, there's no guarantee that this is the end of the trend, you think it's going higher, and, you know, it's one of those situations where it's your call. You got to kind of decide. You could put a stop if you were interested in staying in this market and giving it a little leeway, let it play a little bit.